Hello everyone, how are you all? I hope you're keeping fine in this pandemic situation. So, we'll begin with a video today. We will be discussing in this video about share trading. Now, many of you might have a confusion as to what share trading is. Shall we be benefited out of it? Or there are commerce students also who ask me the very same question. We are studying commerce, but we don't have idea about share trading. So, we'll discuss it. How to start investing in stocks. Let's start with a beginner's guide in investing and I will help you out with it. Investing is actually a way to set aside money which you are busy with or you have that money so that you can fully reap rewards of your labor in the future. Investing is actually a means to be a happier ending. Legendary investor Warren Buffett defines investing as the process of laying out money now to receive more money in the future. Now, the goal of investing is to put your money to work in one or more types of investment vehicles in the hopes of growing your money over the period of time. Now, discussing about the key features or the key takeaways. Investing is defined as the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit out of it. Unlike consuming, investing earmarks money for the future, hoping that it will grow over the period of time and it will give you benefit. Investing, however, also comes with the risk for losses. Investing in the stock market is the most common way for beginners to gain investment experience and also profit along with it. Now, what kind of investor are you? Before you commit your money, you need to answer yourself this question as to what kind of investor am I? When opening a brokerage account, an online broker like anyone or which is available in India will ask you about your investment goals and how much risk you are willing to take on. Some investors want to take an active hand in managing their money's growth, and some might prefer to sell it and just forget it off. More traditional online brokers, like the ones I mentioned earlier, allow you to invest in stocks, bonds, exchange traded funds, that is ETFs, index fund, and mutual funds. Online brokers are either full service or discounted. Full service brokers, as the name implies, gives the full range of traditional brokerage services, including financial advice for retirement, healthcare, and everything related to your money. They usually only deal with higher net worth clients and they can charge substantial fees, including a percentage of your transactions, even a percentage of your assets they manage, and sometimes a yearly membership fee might also be chargeable by them. It's common to see minimum account sizes of 25,000 and up to a full service brokerage level. Still, traditional brokers justify their high fees by giving advice detailed to your needs. Now, discount brokers. Discount brokers are used to be the exception, but now they are on the norm. Discount online brokers give you tools to select and place your own transactions, and many of them also offer a set it and forget it robo advisory service tool. As the space of financial service has progressed in the 21st century, online brokers have added more features, including educational materials on the sites and mobile apps. Now, in addition to this, although there are a number of discount brokers with no or very low or minimum deposit restrictions, you may be faced with other restrictions as well. And certain fees are charged to accounts they don't have a minimum deposit. This is really something an investor should take into account if they want to invest in stocks. Robo advisors. After the year 2008 of financial crisis, a new breed of investment advisor was born. That is, as we know now, the robo advisor. John Steen and Roverman of Betterment are often credited as the first in the space. Their mission was to use technology to lower costs for investors and streamline investment advice. Now, since Betterment launched this, other robo-first companies have even founded and even established online brokers, like there are many which are available whom you cannot contact or see personally or meet directly, but they are like robo-advisory service people and they will provide you so. According to a report of America, 58% of Americans say they will use some sort of robo advice by 2025. If you use an algorithm to make investment decisions for yourself, including tax loss, harvesting, and rebalancing, a robo advisor may be for you. And as the success of index investing has shown, if your goal is in long-term wealth building, you might do better with a robo-advisor. Investing through your employer. If you are on a tight budget, try to invest just 1% of your salary or income into the retirement plan available to you at work. The truth is, you probably won't miss a contribution that small. Work-based retirement plans deduct your contributions from your paycheck before taxes are calculated. Now, which will make the contribution even less painful and you will be benefited after your retirement. Once you're comfortable with a 1% contribution, maybe you can increase it as you get your annual raises. You won't likely miss the additional contributions. If you have a 401k retirement account at work, you may already be investing in your future with allocations to mutual funds and even your own company stock. Minimums to open an account. Now, there are many financial institutions which have minimum deposit requirements. It is so mandatory as per the company. In other words, they won't accept your account application unless you deposit a certain amount of money. Some firms won't even allow you to open an account with a sum as small as 1000 rupees. It pays to shop around some and to check out our broker reviews before deciding on where you want to open an account. We list minimum deposits at the top of each review. Some firms do not require minimum deposits. Others may often lower costs like trading fees and accounting or management fees if you have a balance above a certain threshold or a certain amount of money. Still, others may give a certain number of commission-free trades for opening an account. Commissions and fees, as economics like to say, there is no free lunch. Though recently many brokers have been racing to lower or eliminate commissions on trade, and ETFs offer index investing to everyone who can trade with a bare bones brokerage account, all brokers have to make money from their customers one way or other. This is the career. In most cases, your broker or the broker you know will charge a commission every time that you trade stock either through buying or by selling. Trading fees range from low end of rupees 2 per trade, but can be as high as 1000 for some discount brokers. Some brokers charge no trade commissions at all, but they make up for it in other ways. There are no charitable organizations that are running brokerage services free of cost. Depending on how often you trade, these fees can add up and affect your profitability. Investing in stocks can be very costly if you hope into and out of positions frequently, especially with a small amount of money available to invest. Remember, a trade is an order to purchase or sell shares in one or the other company. If you want to purchase 5 different stocks at the same time, this is seen as 5 separate trades, and you will be charged for each and every one. Now imagine that you decide to buy the stocks of those 5 companies with your, say, 1000 rupees. To do this, you will incur 50 rupees in trading cost, assuming the fee is rupees 10, which is equivalent to 5% of your 1000 rupees. If you were to fully invest the 1000 rupees, your account would be reduced to rupees 950 after the trading cost. This represents a 5% loss before your investments even have a chance to earn. So, should you sell these 5 stocks, you would once again incur the cost of the trades, which would be another 50 rupees. To make the round trip buying and selling on these 5 stocks would cost you around rupees 100, or 10% of your initial deposit amount, that is rupees 1000. If your investments do not earn enough to cover this, you have lost money by just entering and exiting positions. If you plan to trade frequently, check out our list of brokers that are available in Google who are cost conscious traders. Mutual fund fees. Besides the trading fee to purchase a mutual fund, there are other costs associated with this type of investment. Mutual funds are professionally managed pools of investor funds that invest in a focused manner, such as a large cap stock, or there are other things also. There are many fees as investor will incur when investing in mutual funds. One of the most important fees to consider is the management expense ratio, that is the MER, which is charged by the management team each year based on the number of assets in the fund. The MER usually ranges from around 0.05% to 0.7% annually and varies depending on the type of fund. But the higher the MER, the more it impacts the fund's overall returns. You may see a number of sales charges called loads when you buy mutual funds. Some are front-end loans, but you will also see no-load and back-end loan funds. Be sure you understand whether a fund you are considering carries a sales load prior to buying it or not. Check out your broker's list of no-load funds and no transaction fee funds if you want to avoid these extra charges. In terms of the beginning investor, the mutual funds are actually an advantage relative to the commissions on stock. Now, the reason for this is that the fees are the same regardless of the amount you invest. Therefore, as long as you meet the minimum requirement to open an account, you can invest as little as 50 rupees or 100 rupees per month in a mutual fund. The term for this is called dollar cost averaging, that is DCA, and it can be a great way to start your investing process. Now, coming to the diversity and reduced risk. Diversification is considered to be the only free lunch in investing. In a nutshell, by investing in a range of assets, you reduce the risk of one investment's performance, severely by hurting the return of the overall investment. You could think of it as financial jargon for don't put all your eggs in one basket. In terms of diversification, the greatest amount of difficulty in doing this will come from investing in stocks. As mentioned earlier, the cost of investing in a large number of stocks could be really very detrimental to the portfolio. With a rupees 1000 deposit, it is nearly impossible to have a well diversified portfolio. So be aware that you may need to invest in one or two companies at the most to begin with. Now this will increase your risk. This is where the major benefits of mutual funds or exchange traded funds, that is ETFs, as I already told you, comes into focus. Both types of securities tend to have a large number of stocks and other investments within the fund, which makes them more diversified than a single stock. Now, the bottom line is it is possible to invest if you start or if you're just starting out with a small amount of money. But it is more and more complicated than just selecting the right investment, a feat that is difficult enough in itself. And you have to be aware of the restrictions that you face as a new investor. You will have to do your homework to find the minimum deposit requirements for the accounts and then compare the commissions to other brokers. Now, there are chances that you won't be able to be cost effective or cost effectively buy individual stocks and still be diversified with a small amount of money. You will need to make a choice on which broker you would like to open an account. Now, the benefits of stock marketing. Now, this is a very common question that people ask. The primary objective of investing is to ensure that every person is able to meet his or her financial objectives. Rise in inflation makes it inadequate for individuals to simply earn and save some part of their incomes. To meet the price increases due to inflation, investments become important. The stock market is one of the oldest and most popular investment avenues due to several benefits of investing in stocks. Benefits of investing in stocks, let's discuss that. If you invest in stocks, you will have higher liquidity, versatility, higher returns in shorter periods of time, acquire ownership and the right to vote, regulatory environment and framework, convenience, higher liquidity. In the Indian Stock Exchange market or the Bombay Stock Exchange and National Stock Exchange NSE plays important roles. Most companies trade their shares on either or both these exchanges. This provides higher liquidity to investors because average daily volumes are high. Therefore, if an investor wants to buy or sell any product on the stock exchange, this liquidity makes it very, very easy. Now, talking about the versatility, the stock market offers different financial instruments such as shares, bonds, mutual funds, and derivatives. This provides investors a wide choice of products in which to invest their monies. In addition to providing investment choices, this flexibility is beneficial in mitigating the risks inherent to stock investing by enabling diversification of investment portfolios. Now discussing about the higher returns in shorter periods of time. Compared to other investment products like bonds and fixed deposits, stock investing provides investors an excellent possibility of making greater returns in comparatively shorter time period. Adhering to the stock market basics such as planning the trade, using a stop loss and take profit triggers, doing the research and due diligence, and being patient can significantly mitigate the risks inherent to stock investing and maximize the returns on share market investments. Now, talking about acquired ownership and the right to vote. Even if an investor acquires a single share in a company, he acquires a portion of ownership in the very same company. This ownership in turn provides the investor or investors the right to vote and offer his contribution in the strategic movement of the business. Although this may seem like an exaggeration, it is true, and there are several instances where shareholders have prevented a company or the company's management from making an unreasonable decision that they don't like or that are detrimental to their interest. This is very practical and this has happened. Now discussing about the regulatory environment and framework. The Indian stock market is regulated by the Stock Exchange Board of India, that is SEBI. The SEBI has the responsibility of regulating the stock exchanges, its development, and protecting the rights of the investors and the shareholders. This means when investors invest in financial products of the stock market, their interests are really very well protected by a regulatory framework. This significantly helps in reducing risk due to fraudulent activities of the companies. Now discussing about the convenience, technical development has influenced every aspect of modern living. The stock exchanges are also using various technical advancements to provide greater convenience to the investors. The trades are all executed on an electronic platform to ensure the best investment opportunities to investors in an open environment. In addition, broking service providers offer online share trading facilities that make investing convenient because investors can place their orders through a computer from the comfort of their homes or offices or anywhere else. The demat account makes it easier for investors to hold all the products within their investment portfolio electronically in a single location, which makes it easier to track and monitor their performances. Although stock investing has several benefits, investors must also be cautious and careful while making their decisions. Understanding the stock market basics and doing their research before investing is advisable to mitigate risks and maximize their returns. So, all this I have discussed about share trading, what you are going to do, the basic tips, which is more profitable, which is not profitable, what is brokerage, what is share trading. All this have been discussed in this video. So I am sure you will be benefited with this video. This is a very practical and relevant video which I have made because there are many people who doesn't have any idea about stock trading or share marketing, but they are very eager to do so. So if you are really keen to do so or if you are interested in doing so, please follow this video. This is a really nice one, a helpful one definitely. Even when I started share trading, I was not aware. I have made this video with my own experience, so definitely I'm sure this will also be helpful to you. So I will end my video here. Stay happy, stay safe, and just follow my video. I hope this will really be beneficial. So concluding my video here. Thank you.